Good morning and welcome to the most underrated show on YouTube. Is there going to be a 20% pullback in the market? That's a big question. Everyone's talking about Michael Burry. Another big question. Are we going to have another housing crisis? That's something that some people are starting to say. Let's see. All right, NASDAQ futures up a touch and everything else is pretty flat. So I'm going to start with this Carnival cruise story just because you guys were talking about it in the comments. So CDC's in discussion to begin sailing in July. So those of you know that Paul and I have owned Carnival Cruise since April or May of last year. of 2020 when we went through all of the financials of all of the big cruise lines and such. So, hey, let's see. Their CDC says they're going to begin sailing in July. But it wants to ensure that cruise ships industry is treated equally to every other business in the country. Okay, let's see. I'm reading this for the first time with you guys. Moreover, because children are less susceptible to the coronavirus strain, there is no official government requirements for them to be vaccinated. Okay, so I'm assuming, let's see. I'm assuming that they're going to want every passenger to be vaccinated just because you're in close quarters for an extended period of time. Let's see. All right, well, a lot of stuff comes out of Florida, so a lot of it's going to go through Governor DeSantis down there, so we'll see. But let's get to the stories that I really prepared today. Okay. I want to do a market overview first. Here we go. Market overview first. So I usually don't look at this, but this comes right from the front page of Yahoo Finance. They put it out every morning. Just kind of goes over what was happening in the markets on Monday. So Walmart shares this morning are up now over 3%, which I'm seeing. So they reported earnings. They destroyed their earnings. And I mean, I can't really say it's a surprise. The big box stores have been doing very well. Home Depot also did phenomenal on their earnings report this morning. And the good thing about that Walmart has done is they have really crushed their Yahoo Plus. They've really crushed their online sales. And I know that they've come out with Walmart Plus. I have not heard the numbers on Walmart Plus. I haven't dug into it. I'm very interested to see what they are. Walmart Plus is essentially Amazon Prime for Walmart. So throughout the pandemic, I actually stopped using Amazon just because there was such backup on everything. And I went ahead and started using Walmart's over $35 gets you free shipping. And that's what I used throughout the entire stay-at-home stuff. So that was pretty interesting. Let's see, tech sector. So the information in tech sector has increased by just 3.4% this year through Monday's close. The broader market is up almost 11% in that time. And actually, it is the worst performing of the 11 sectors. So I know that tech has been rough out there, but let's see if, I mean, with these rates going, if the rates start to trickle higher, it's going to be tough for tech. We're already seeing a lot of chip shortages and whatnot. That's already bad. That's bad enough for them. But if you start increasing how much money is going to cost for them to borrow, that's another bad thing for tech. So we'll see how tech goes in the near future, but it has been a rocky road for them in 2021, that's for sure. Another thing that I caught was talking about the inflation again. You're seeing supply and demand issues like I talked about yesterday. Transports are really struggling out there. I haven't looked into this. I want to dig deeper into this. What we're not seeing is monetary inflation like you saw in the 70s and 80s. So I do want to dig more into this inflation talk just so I know a little bit more what I'm talking about when it comes to it. But this whole inflation thing is very interesting. We really haven't seen true inflation. I mean, it's been a very long time since inflation was at 3.5%, 4%. Just because we've been pumping the interest rates so low. I mean, we started really cutting rates aggressively in 2018. I remember October 2018, they started to trim rates aggressively. So it's good for home buyers, good for borrowers, but man, I don't know. All right, let's see here. Oh, wow, we have a guy from Egypt. How about that? Welcome. All right, we actually think tech is a bit, this story's boring me. So bottom line, tech's getting a little bit beat up. This is the fun one. Hedge fund manager from Satori Fund. He is billion-dollar hedge fund manager Dan Niles. He's pretty public. He talks often on CNBC, Fox Business, this and that. So he is pretty public figure. But he is saying that you could see a 20% pullback in this market. And of course, the reason being is it's sparked by the Fed and if they're going to lighten their monetary policy. And he later in the story, we'll see that he's going to start saying that they're going to stop doing their asset purchases in the summer. So we could start seeing that. And I don't blame them. Other countries have already started. I've said it maybe 5 times on the show. It's always when you do something in finance and in the economy, you have to look at the next thing and say, what's next? That's what Warren Buffett said at his annual meeting. It's very true. So let's see. Inflation fears already roiled over the market this week, in the NASDAQ falling 2%. One hedge fund founder is sounding the alarm over a potential 20% collapse that could be sparked by the Federal Reserve signaling an end to accommodative pandemic era monetary monetary policy later this year. We will, he said that the Fed easing will likely corner the Fed into tapering its accommodative policies sooner than expected. When we're getting this when we're getting this kind of interesting turbulence that we're seeing, that's not a very normal thing. And something needs to be done. If you have got higher food prices, energy prices, housing, rent is increasing rapidly, the Fed's not going to have any choice. They're going to have to wind down this $120 billion a month pace of asset purchases by the summer. And here it is. The Fed can say what they want, but this reminds me of some degree of them saying back in 2007 that the subprime crisis was well contained, and obviously it wasn't. So the interesting thing about the Fed is, of course, they're out there to calm everybody and this and that. It's if you want to do a little bit more digging, I guess you got to see what it's about. But this is the first fund manager that I've seen saying this kind of thing. And I think there's something to be said about it. And when we take a look at this chart, and remember, the CPI went up. It was the highest increase since 2008. If we look at this chart right here, let me see if I can blow it up a little bit for you. This is a poll of where Americans are seeing inflation. Obviously, fresh food, packaged food, household goods, personal services. So really, I mean, let's see here. Utilities are increasing. So people are seeing it in their pocketbooks, and there is just you're going to have to keep an eye on this stuff. Mr. W, I do agree with you. I think that even a bigger percent pullback than 20% is warranted and would normalize some things. But the point is, it's going to be very rough out there for a lot of people because they are not preparing in the right way for it. But that's okay. Also, countries like Brazil and Russia have already seen a rise in interest rates. And the process has already started in other countries around the globe. And I think that the U.S. is just going to be lagging and playing catch up, which is kind of a problem. So, and this is an interesting thing. None of this would honestly matter if valuations were low, but they're at record highs. So we are, as everybody in here knows, we are at high valuations. I do think, even if we get some kind of 20% pullback or such, I mean, we got a nearly 40% pullback last year. Granted, it was a little bit different circumstance. It wasn't based, well, it was, but it was driven by shutting down in a pandemic. And we saw how incredible that rebound has been to where we are right now. So can they do it again? Sure, of course they can do it again. They have all the power in the world, but we'll see if it's going to happen. Yeah, here's the final statement that I want to make. Then I want to go and look at some other interesting stories. If after 13 years of the Fed easing money for you, and now they all of a sudden have started to pull back, you're going to have to rethink where you invest to get a better risk versus reward trade. And lower valuation names that make lots of money, that's where you want to be, i.e. value plays. So we'll see if that's going to be the end of this run. If I had to bet on it, I wouldn't bet on it, but we shall see. IBM set to acquire a Salesforce partner. So Salesforce back in the news big. IBM is back in the news big. The last time I heard about IBM for real was, well, it's been a long time, but I remember Warren Buffett talked about it at his annual meeting, and it was one of those in 1989, one of the top 20 largest market cap stocks in the world, I believe it was, and now it's not. But IBM back in the news. So they are going to, IBM said Tuesday it would buy WAG, a consulting partner for Salesforce, and their locations are really throughout the world. So the discussions of the deal are not done, but those of you that are in Salesforce and such, maybe you got some trades coming along here because Salesforce loves being in the news, and that stock goes pretty crazy when you go to trade it. So those of you day traders out there and whatnot, go ahead and get you some. AT&T. Scared money don't make money. Is that the diamond hands thing? All right. Okay. Do you see the S&P correcting more than anything else? Well, tech is obviously going to get hammered the most right off the rip. So what has led this market up is going to lead this market down. Guys, smash that like button for me while you're sitting here. What has led this market up is going to lead the market down. And if you look at what has driven this market over the past 5 years, over 45% of gains in this market have come from Facebook, Amazon, Apple, Netflix, Microsoft. So it's been the FANG stocks plus Microsoft that have driven this market higher and higher. And if you really want to break it down, it's like 4 of the stocks. It's Netflix, Facebook, Apple. No, that's not right. Doesn't matter. There's 6 stocks that have driven this market to 45%, that have accommodated 45% of the gains right now. So what goes up must come down. I'm not saying it's going to go down forever, but things just don't go up forever. It just doesn't work that way. So this is an interesting story, interesting things said by the executives at AT&T. AT&T admits that it made a terrible mistake getting into the media business with, made a terrible mistake getting into media business with Discovery deal. Yeah, okay, so that's right. So AT&T bought Time Warner 3 years ago for, I think it was $81 billion. It has not gone very well for them. So now they're bringing in Discovery. They're merging with the Discovery, and Discovery is going to take that spinoff of media, which is actually a pretty good idea. AT&T has had a rough go at the past, 3-4 years. It's been they've not been doing the right things. So 85 billion, I misspoke. So AT&T sent a good bit of shareholder value up in smoke by trying to be the king of content. They tried to compete with Amazon and Netflix, and it didn't go too well for them to this point. So AT&T on Monday said it will spin off its media division, Warner Media, and merge it with Discovery that holds names like HGTV, Animal Planet, Food Network, and TLC. So those of you that love the what's the show? 90 Day Fiancé. There you go. The newly combined Warner and Discovery would be one of the largest global streaming platforms in direct competition with Amazon and Netflix. Proceeds from the deal for AT&T will go towards paying down considerable debt, low to more than $160 billion. So shareholders, that's hopefully they're changing their tune and they want to take care of you instead of doing whatever that they were doing before. Now, they have a pretty, I have to say, them or Verizon has the biggest 5G network in the United States. So I'm assuming that they're going to start putting the money towards that. I hope that that's a good investment for them, because the 5G thing I'm not really on total board with outside of cell phone services. AT&T is set to receive $43 billion in combination of cash, debt securities, and Warner Media retention. So this is great. And then, of course, the deal is going to take place in mid-2022. It's rare that you see a management team and a board acknowledge so clearly that they made a terrible mistake and that they're willing to undo it. I got to give them credit for it. I do agree with that statement. So let me go and look. I want to show, actually, it's pretty much just what I told everybody yesterday. Let's start with Discovery. So yesterday morning, this is what happened with Discovery. And everyone, I remember the comments yesterday, like, oh God, we missed it, this and that. So this was Friday. This was pre-market, and this was Monday. This was yesterday. So pre-market, Discovery shoots up 16%. Okay, this is pre-market. By the time the stock opened in the morning, it opened at a positive 10%. All right. By the end of the day, right here, Discovery was minus 5%. So it went from basically plus 16% to minus 5%. And when it was up here, I said, guys, even in the morning, I said before the market opened, it was 16% here. And I said, don't worry, you've already had a 6% pullback. This is not going to last. This is why when things happen initially on big jumps, you take profits, and you got lucky in that time frame. That's what you need to do. Take profits on it, run away, let everything settle down, and consider yourself lucky for massive jumps like that. And by the end of the day, you had minus 5%. Today, this morning, you're already down another 1.25%. So, guys, when you get big jumps like that, just trust me. Just trust me. More times than not, big jumps are going to give you lucky rewards. Yesterday, AT&T, it was up 4% at one point, and you can see throughout the day they dropped. It was down over 3% by the end of the day, and right now it's down 5.5%. So, yeah, I don't really know what else to say except for just listen to what I'm telling you. It's pretty simple. Just pat myself on the back real quick. You're welcome if you got out of that. If you didn't, I don't know what to tell you. It'll eventually be okay. Trust me. All right, Walmart. Walmart crushed its earnings. No surprise, like I talked about like I talked about yesterday. Like I talked about yesterday. Like I talked about this morning. They just crushed their earnings. Their operating revenue expectations was basically 132 billion. They came in at 138, almost and a half. Adjusted earnings per share $1.69 compared to $1.22. So they crushed it. It's not surprising. Look at Walmart's stock price since 1992, 1991, whatever's supposed to be here. That's just incredible. They've done very well. People do want to go out and shop. Walmart has everything. Whew. So what I really liked about this story was that we pointed out here that Walmart e-commerce grew 37% in the quarter. Cool. This compares to 97% year-over-year digital growth. Man, that's incredible. So people are using the online stuff. I mean, and the great thing is, the great thing about Walmart is their e-commerce and their Walmart. That Walmart app on the phone, it's awesome. I love using the Walmart app. It's so streamlined. You get 2-day delivery. Sometimes, in some cases, you get free next day delivery. And if you really need something, order it and go pick it up at your local Walmart. Most people don't live too far from a Walmart in this country. So, So the company has maintained that its outlook for capital expenditures is going to be $14 billion this year. And it's going to be used for building out the supply chain and automation to keep up with rising demand. So this is something that I want to go and dig into the 10K on and look at Walmart's, just out of curiosity, how many Walmart Plus subscriptions there are. If somebody wants to tell me how many Walmart Plus subscriptions there have been, that would be wonderful. I'm just very curious to see. So we were in Walmart in the Bid and Ask Nation, and here come the people that are like, trading doesn't work. So we were in Walmart in the Bid and Ask Nation. I told everybody, exit your position, get down to a tracker share on earnings, because last time Walmart reported excellent earnings. And I'll show you what happened. It's hard for Walmart not to put good earnings in this market. So this was Walmart's earnings last time. They reported earnings that actually destroyed the market and expectations, and it was great. And you got this massive drop in price. So today, I told everybody right here, we were in this thing. It was just consolidating sideways, not really doing much for us. I said, let's exit this. Let's go down to a tracker share, one share, just stay in it. Let's hope that the stock price jumps up like it has, so it clears all of these moving averages. And today, if we get a nice engulfing candlestick, we'll do something with it. If not, we'll do something tomorrow. I can see Walmart going up to this $150 some range, and that's the safest way to play it. So remember, the way that I trade is to lock in the most gains you can, and that is that for Walmart. So, guys, if you're in the Bid and Ask Nation, let's probably get on that, and we're gonna do very well on that. I'm very happy that thing has jumped up over its 200-day moving average, and we should do very well. So, Michael Burry of The Big Short, he reveals that he has a $530 million bet against Tesla. The family office run by Big Short investor Michael Burry has disclosed a short position on Tesla worth more than $500 million. And of course, it's Scion Asset Management. So he has bought put options, 800,100 shares of put options worth $534 million. So the thing that I texted to the Everything Money chat this morning is Michael Burry is not often wrong. He is often extremely early. So, if you look at what Michael Burry has done in the past, not even just The Big Short, not even just the the housing crisis back in 2008, he was, I mean, he's usually right. He was right on GameStop. He was in GameStop before any of the Wall Street bets people got into this thing. I mean, of course, he didn't think that was going to happen, I'm sure, but he was right on GameStop. And let's see, he tweeted in February, "My big short just got bigger and bigger and bigger," referring to Tesla's surge in market cap. "Enjoy it while it lasts." And yesterday, shares closed at $576 a share. They were once at almost $900 a share back in January. And the market car, electric car, is at their valuation is at $555 billion right now. So I remember when Tesla was getting up there, they were smelling $750 billion market cap, something like this. So Burry also said, and this is a very important thing to remember about Tesla. Burry's also said last year that the green regulatory credits, which Tesla has relied on to generate profits, which is a massive, massive amount of their profits, is going to dwindle, and has, as they sell more cars. The government only gives you a certain number of credits. And actually in 2018, somebody correct me if I'm off by $250. I think it was a $7,500 credit that the government was giving you. After Tesla sold, after whatever EV company sells a certain number of cars, that number gets cut in half. And then they sell another certain number of cars, gets cut in half. Another certain number of cars gets cut in half. So, Tom Nash is here. Tom, I'm not hating Tesla. Trust me. I want a Tesla. I'm probably going to buy a Tesla Model S. They're phenomenal cars. I just don't agree with the valuation. It's no hate on the company at all. But thanks for popping in, Tom. You're a good guy. Let's see here. So that's a big thing. We need to just go look at the 10K and look how much money that they have been receiving, how much Tesla has been receiving in tax credits. You can go and do the same thing and look at any other company that is doing EVs, and you're going to see the tax credits. It's going to be the same. That's going to be giving them a lot of money. So JK probably has a lot of money to be made in Tesla. I agree with you, going long or short. I think my traders, they're making a lot of money in Tesla. I threw away the piece of paper, but I had a guy back there last week. He was saying he made money up and down on Tesla. And that is, I think that's exactly what you should do. I'm not saying that you should be a long-term investor in Tesla, but hey, take gains where you can find them. I don't see why you wouldn't. I have traded Tesla before. I did very well on it. It was a quick trade, got in, got out, and here we are. So last story. Now this guy is pitching a book, but I'm going to actually read this book because it actually looks like a pretty good book. So, former CEO of Washington Mutual, which went down in the 2008 crisis, foresees another housing bubble, and he blames the Fed. Okay, let's see what he has to say. Like many other banks, Washington Mutual rode the wave of low interest rates to grow its mortgage business during the housing boom of the early 2000s. During Kerry Killinger's time as CEO of Washington Mutual, his assets grew to more than $300 billion. Mo secretly owns Tesla but doesn't tell Paul. But when the subprime bubble burst, the bank fortunes quickly turned. In September 2008, at the height of financial crisis, Killinger was forced out of the company's board. Ultimately, the bank was seized by federal regulators, and it still stands as the largest bank failure in U.S. history. So he wrote this book called Nothing is Too Big to Fail, How the Last Financial Crisis Informs Today. I'm actually really excited to read this book. I hope it's not just some kind of sales pitch. I don't think it is. I don't think he has anything to gain at this point, except for maybe money off of a book. But the government's response to the last crisis and where there's growing risk in today's economy. So where the Fed has led, I don't know. So yeah, this is... Guys, I keep looking at things that we keep throwing things on the pile. I mean, somebody was talking about the Buffett indicator earlier today. Then you look at the PE valuations of the market. Then you start looking at just all of these things that you just keep putting this on the burn pile. And eventually somebody's going to throw some gasoline on there that's just going to light up. I mean, yeah, I don't know. This is getting a little bit out of hand, but we'll see. All right. Let's see. I highlighted. This was my favorite part of the story. There were plenty of mistakes to go around for everybody in the last financial crisis. That's absolutely true. And I think that some of the mistakes were made on the part by the government regulators. They had no game plan for dealing with the crisis. This goes back to what I was saying about when you do something in economics, you have to do something else. I think there has to be something else where they go and do something. They got to do something else. You can't just stop. And if their thing right now is to just increase interest rates and hope that inflation doesn't occur, it's not going to work out well. I don't know how you fix this problem. This is too big for me to figure out, and hopefully the people in charge know enough to figure it out. So let's see. We should do a pick. Okay, somebody give me some stocks and I'll go over them. And then we will be done here. We got a big day of recording today. Of course, we have the live stream at 1 o'clock. Oh boy, look at Tesla. They dropped below their 200-day moving average. That's not good. That's not good for anybody. But Matt, are you causing problems in the chat? It's like taking too many steroids and your gym gains will eventually blow up. Okay. All right. Call me a fool, but I'm waiting for Tesla to hit $200. I don't think that you are a fool at all. The only thing I would say you're a fool is that 200 may be a little bit high. Hey Mo, I've been in the Bid and Ask Nation since $25 range and just recently set up my trading view. Can't believe the ton of information I've missed. Hey, welcome, buddy. Welcome. All right, let's look at Microsoft. Bogdan wants it. Bogdan is one of the better traders in the Bid and Ask Nation. Let's see what we got. Microsoft. Come on, baby. All right, so Microsoft, certainly a downtrend. But all tech is right now. It's no big deal. I mean, it's sitting right at its 50-day moving average. I wouldn't be surprised if this thing just hovered, consolidated right here. You can kind of draw a line going back and pumps up. That's that. Neo. Okay, let's look at Neo. How many stocks of T are going to let's see. Actually, I want to see T and then I'll look at this Neo. I don't know why we're still talking about Neo, but whatever. Oh, yeah. Oh boy, look at T. Drop below its 25, 50, and 100-day moving average. Its next hold is the 200-day moving average at 29.37. Good luck. That's all I have to say. Good luck. Neo. Dun, 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 shorting Tesla on a day trade. Join the Bid and Ask Nation. Guys, Gianni that just said that in the comments, he's the one that was going long and short on Tesla last week, and he's crushing it. So Neo is just a straight down trend. I don't see anything coming of this. You got a lot of work to do before you get through all of those moving averages. So guys, if you want to join the Bid and Ask Nation, right over here, patreon.com/everythingmoney. My tier is $67 a month right now. This thing is going to be going up to $100 at some point. You get full access to me, full access to the Discord, which is an incredible community. And those of you that are in the Discord, I added a new ambassador last night. I'm going to make the announcement in the Discord right after this show. And of course, you get discounts to everything. Guys, you get all the Everything Money software for free. This value is incredible. There's a lot of people that say they came in, never knew how to trade, which is the best case situation because you don't have any bad habits that I need to break. And you will do very well. As a matter of fact, Gianni in there had a lot of bad habits that I had to break. And he kept sticking to his terrible bad habits. And then he decided to listen to me. And now he is actually crushing it. So, good job, Gianni. Good job. My buddy from Italy who has good taste in cars. That's all I know. All right. I want to look at Intel and then I'm going to go because the market just opened and I got things to do. Okay. Intel is up 1%. Paul and I have puts on this thing at $55 and $53 that expire on Friday. So we'll see. Where's the 200-day? Yeah. Very good chance it will be assigned those shares. So we will see. But Neo, hundreds of cars. I love it. So, all right, guys, you have a great day. I will see you at 1 o'clock on the live stream. We got a lot of stuff to talk about, and it's going to be a lot of fun. So, big day of recording. And, of course, I will be back here on Wednesday morning. That's tomorrow. Smash the like button on your way out. And you guys have a great day. Peace.